Hi, welcome to the Market Alert for Friday, the 28th of August 2015. And starting off with a bit of news, actually, something that I mentioned in last Saturday's Market Alert about China holding $1 trillion in US dollars and liquidating that. Well, it's now been officially reported. It has to be official if it's in the mainstream. Zero Hedge report these things months ahead of the mainstream. But it seems that Bloomberg are now on the bandwagon and seem to agree that China is getting rid of its US treasuries. The market at the moment, this rally that you're seeing, is only a temporary thing before we head back to the downside. Seen it all before. And again, we'll look at that in more detail in a minute. But this is a very important development here that the mainstream are now actually reporting that the Chinese are selling their $1 trillion holding in order to raise funds for some form of QE or supporting the stock market. So it just goes to show that even though you've had a couple of days to the upside, CNN would have you believe that there is no crash, it's just a correction, we're going back to the all-time highs. Take no notice of it. It's absolute nonsense. As you'll see it unfold as the debt situation starts to unfold over the next few weeks, it's only going to get worse. So yesterday, let's just go to the 5-minute chart and drag this across. The pre-market sessions are still giving good signals. Yesterday I spoke about that the volatility was dropping. Well, I got that wrong because after recording the market alert, the market then put in more buy signals than I've seen in a pre-market session for a long time. We then had the sells. It was just a profit fest yesterday, and oddly enough, in the this signal is 14.15, just waiting for the open, and you can see the volatility there coming in. So only signals half an hour before the official opening time you would want to ignore, but interesting to see there that the first signal is this signal here rather. Doesn't quite go down because obviously you've got the opening in the pre-market session. So 50-point loss on this one, but already in the pre-market sessions there's been a lot of profits. So the market coming back here, then it goes up and more than the scalp. Again, about 40 points. Back down here for the market finding support at the 16,600, then goes back, and then it's just acceleration downhill of several hundred points, nearly 300 points on this trade down to this psychological level. And then they brought the market back, and there's the old V-shaped correction that you tend to get with these sorts of sell-offs. But what was interesting watching this live yesterday was the amount of volatility in this area here was just something else. And if you go to ETX, they actually have a VIX volatility chart in real time. I'm just going to drop this down to 4 hourly, and this is the September contract of the VIX, and it's a very interesting picture. Even though the implied volatility is showing quite a big drop, the nearby futures contract is still trading up in the highs of Monday's high around 27.6, 60 and a half. And Wednesday, the market came back to this level, then was slammed down. And yesterday, you can see there was pressure as the market was starting to move back upon the VIX. And I believe this is the PPT, the plunge protection team. The volatility was just huge in these moves here. I know because I was on the short side, and 1 minute I'd have 50 points and I didn't have 50 points. And eventually I thought that I'll just get out, because having ridden the move, I thought it's time to get out, and it was the right move to make, because then the market just exploded back to the upside. And unfortunately, no signal. We would have had one had this market have opened below and then closed up, but we didn't. But it closed back above the psychological level. But nobody, given the market conditions at the moment, would have believed the market would have reversed a 300-point move just before the close, but it did. And since then, the market's been sideways. And again, we still got this enough volatility for overnight trades, which is so unusual. There is a huge amount of volatility still in this market, and now you can see prices starting to move down there as well. In the daily charts, we've got 2 days of so-called buying. I beg to differ. I think it's not buying at all. I think it's short covering by those that have sold, having to get out of the positions, and therefore moving prices to the upside. The second day, the volume is not, it's not spectacular, and we're starting to see prices move to the downside here as well. And it's also Friday. It's going to be a very interesting day to see what the Fed may do behind the scenes, and the government with the PPT, the plunge protection team, should prices start to slide. We've seen it now for the last 2 days, Wednesday and Thursday, where they've rallied the market before the close. For me, it's just pushing on a rope, as it would. It's going nowhere. It's a case of the classic dead cat bounce, and before we know it, we'll be heading south once more. Let me just tidy up on here a bit. Let's get rid of the fibs there, and also here. And one place you want to watch, if and when prices do start to drop, is the high of Monday's bar, because this is where it all started. 16,435. Watch this area. The market went through it yesterday. Watch if prices trade back to this level, because any breakthrough there will see prices move to the downside. On the implied volatility, this is the volatility based on the options. The VIX is the fear volatility index, as I tend to call it. This, you can see 2185, big drop down, and it needs to drop in order for the market to move lower again, because there's so much froth in the options premiums that nobody will pay the sort of fees for them. Well, certainly the pros won't, the general public will, but not the professional traders. So this needs to drop down just a bit more. Big drop off during the last 2 days, which is great, because that then gives the market room to actually have another sell-off and send this back to the upside as well. So again, just a few words of advice. The pre-market volatility is still good enough to trade it. There is the spread of 3 points on that. Watch out half an hour or so before any signals, before the market opens at 2:30. A lot of volatility there. Also watch if prices do go to the downside. Watch the 16,435 level as well. And finally, let's just have a quick look at the news, because I've forgotten that. Anything out at 3 p.m. Revised UOM consumer sentiment. This is going to be out. This is forecast higher. Also yesterday there was a revision of the GDP figures as well for the US. Pointless, frankly, with what's going on in China, and by the time that tsunami gets over to the west, any revised GDP figures will be, well, revised, and then you'll see the market heading south. Jackson Hole Symposium, this is where a few of the elite all meet. That's at 6:15 p.m. Again, it's a financial Fed type of event, and just a matter of exchanging opinions on basically what the world is seeing at the moment. Or, of course, they will have already known what was going on. They'll know the truth. It's just that it won't filter out as far as the debt's concerned, and the bubble that was created by the Fed's great experiment of QE going into the stock market, and that bubble bursting in the next few weeks and months to come. So just watch out at 6:15, just in case something is reported from the Jackson Hole Symposium, and also the revised UOM at 3 p.m. shouldn't make a fat lot of difference, given that there's a lot of volatility in the pre-market sessions anyway. So it'll just add a bit more. If they're looking for something to move the market up, then they may just use that. It's a medium impact news item, but we are seeing things that we've never seen before. So anything could happen, and also be used to move the markets. Right, that's it from me. I will see you in Monday's edition, unless something major happens today. Give you an update on the debt picture. But other than that, see you in Monday's edition. Oh, just while I'm thinking about it, no markets for Monday in the UK. US open. The US is closed a week on Monday in observation of the Labour Day celebrations. But the UK European markets closed on Monday for the final bank holiday, the late summer bank holiday for August. Right, that's it. See you in the next one.